Hey, what's up you guys? Today I'll be talking about the 3 best Vanguard ETFs to buy and hold forever. I mean forever. Now, as a background, Vanguard is a very popular investment platform that was only founded in 1975, which is a surprise to me. I thought it was much later than that. With the current asset under management of $8.2 trillion, and last year it was ranked second only behind BlackRock and still $2 trillion more than the next one. It has more than 200 funds offered in the US and globally. And they basically started this whole movement of investing in low-cost index funds, which is synonymous to the term boggleheads, referring to John Bogle, the founder of Vanguard. Now, the reason why Vanguard is so highly regarded in the investment community is that it is built for long-term buy and hold investors. It has not and never been designed for frequent traders and short investors who buy and sell for a quick profit. Now, there are similar firms like Fidelity and Schwab, and in terms of the big differences, Schwab is a publicly traded company and Fidelity is privately owned by a single family, which means that they put the interest of their owners first before anyone else's. But Vanguard is effectively owned by its fund investors. So in that case, Vanguard will do what it can to appease their investors and continue to keep costs low by using their net profits. Now, in terms of pros, the great thing about Vanguard is that you're gonna have numerous options to buy mutual funds and ETFs with a low expense ratio. And when I say low, I would say anything less than 1% is a great one. And Vanguard has retirement plan tools and resources on their websites to educate you on setting and achieving your financial goals. And even if you go to other investment platforms, they're most likely gonna have Vanguard funds showing you how trusted they are. And I also use Betterment, which is a robo-advising platform where they automatically invest for you. And they use funds from Vanguard to allocate their portfolio. Now, in terms of the downsides, for anyone who's used Vanguard, you could probably attest to this, is that they have a very outdated design on their website and app. So the user experience is not so great, especially if you compare it to other apps like Robinhood and Betterment, where they have a very nice looking interfaces. And those other apps makes it super easy for their users to navigate through their apps. But because Vanguard funds are their biggest selling point, I would say, it seems like they don't really care about their user experience as much. It kind of feels like a restaurant that looks a little weird and sketchy on the outside, but they know their food slaps, so they know people will still come. Now, in terms of my experience, I had my Vanguard account for about 4 years, and I have my pros and cons with Vanguard. And I would say my experiences are somewhat unique given that I work in the financial services, so I'm not allowed to invest in individual stocks and ETFs due to the risk of insider trading. So I invest in what's called a fund-only account, where I can only invest in index funds and mutual funds. But if you're just getting started with Vanguard, I would highly consider investing in Vanguard ETFs, given that they don't have a minimum and you can invest with as low as $1. And that's because you could buy fractional shares with their ETFs. But the mutual funds with Vanguard typically have a minimum of around $3,000. But ETFs are similarly designed like mutual funds, where the investors will invest their money in exchange for a piece of the ownership of the fund. So you benefit from any capital gains and dividends that are paid out. And the big downside of ETFs is that they, for some reason, don't allow automatic contributions at Vanguard at least, which is pretty big for me. So I would say just continue to invest every time you get paid and put a portion of your income into one of these 3 ETFs. Now, the first ETF is VOO, or Vanguard S&P 500 ETF. It has an expense ratio of 0.03% and a dividend yield of 1.33%. So basically, VOO's objective is to closely track the performance of an S&P 500 index, and the company has to be in one of those 500 companies to make the cut. And those criteria include, number 1, they have to have a market capitalization of at least $18 billion. 2, they have to be an American company or at least 50% of the shares available for public trading. And number 3, the company must be profitable. The sum of their earnings per share over the last 4 quarters must be positive, and it must also report positive earnings in the most recent quarter. And S&P 500 is diverse with sectors including tech, energy, financial, consumer products, healthcare, and information. And tech, with no surprise, has the highest percentage at 29.6%. And their 5 biggest holdings include names like Microsoft, Apple, Nvidia, Amazon, and Meta. And you're gonna see those 5 names again and again. And in terms of the performance, you can see the past 1 year, it has almost a 30% ROI. And over the last 10 years, it's grown by 12.9% annually. And since inception in 2010, it has a 14% growth rate. And the second ETF that I want to talk about is VTI, or which is the Vanguard Total Stock Market ETF, which is basically a little bit more diverse than the VOO because it holds a whopping 3,717 different stocks and follows the CRSP US total stock, which represents the entire US equity market. In other words, it owns every large, mid, and small cap stock listed in the major US exchange. And their biggest sector, again, no surprise, is represented by tech, which is 32%, and its top 5 holdings is identical again. Microsoft, Apple, Nvidia, Amazon, and Meta. But the reason why this ETF will be a great one to invest in is that you not only have the stability and growth of the large cap companies, but you're also able to still invest in mid and small cap companies that have a higher chance of growth while mitigating the risks that come with them. In terms of performance, it's grown by almost 30% in the last 1 year, and it's grown by 12% in the last 10 years. And since its inception in 2000, VTI's growth has been around 8.63% per year. And the third and last ETF that I want to talk about is the VONG, or the Vanguard Russell 1000 Growth ETF. And Russell 1000 represents the top 1,000 companies by market capitalization in the US and comprises of around 93% of the total stocks in the US equity market. And the top 5 holding is again the same: Microsoft, Apple, Nvidia, Amazon, and Meta. Nvidia, oh my God, I can't. And its performance has been pretty crazy, I would say. VONG has grown over by 40% in the last 1 year, grown by almost 16% annually over the last 10 years. And since the inception in 2010, its growth has been 16.4% annually. Now, at the end of the day, all of these ETFs and mutual funds are very similar, where they want to invest in a few hundred or a few thousand companies represented in the US stock market. So it really depends on how diversified you want your portfolio to be and which sector you want to really invest in. And whether you want to invest in the VOO, the VTI, or the VONG ETF, you'll be able to benefit from the stock market's growth while mitigating any type of risk that comes with investing. And you'll also be able to benefit from the low expense ratio. And the 2 things I would really recommend people doing is, 1, to consistently contribute to these funds, even if it's $100 per month, and slowly increase from there. And number 2 is to buy and hold these funds for the long term. So I hope this video was helpful for you guys. If you are interested, make sure you like this video to show me and tell me that you are interested in this type of topic. If not, let me know what else you guys want to see. Other than that, that's it for now. I'll see you guys in the next one. All right, peace.